The chart of the Nifty suggests that we are heading towards the new all-time high, while the advanced decline ratio indicates that there is a sign of danger over here. Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. Sell in May and go away is the common phrase where it refers that generally May is the top when it comes to the US markets, and then the markets correct probably for next 2 to 3 months. Well, that is not the case in Indian markets, and even if you look historic of the Nifty, there is never the case that the May is generally the top. In fact, January is the month where most of the top seven formed are probably the second half of the December, and we have seen the fall starting from Jan and Feb. Though we had a pandemic in March, even if you get 2008 fall was in the first quarter. And if I just look at the historical momentum, yes, the first quarter is slightly dicey for the Indian markets, but generally, even the seasonality analysis suggests that for last 20 since 1996, even if I look at probably the average negative for last 25 years, the Jan is one which has a negative average return, while most of the other ones have positive return. So if I just look at Nifty, been trending very bullish now. We have seen 15,200 levels, precisely 15,183, then we saw 16,747, and now back towards 18,000 levels again, and a sustainable move. Though we had a March range bound, but since the start of the April, we have seen bullish momentum coming back very strongly into the markets. May the bullish momentum is prolonging, and the trend is very bullish as of now. Do the chart, as I said, the chart suggests a bullish scenario, but some of the indicators indicate that there is a sign of cautious. In this video, I'll be discussing this video into two parts. One, where the indicator or the chart structure is indicating that there is a bullish trend, and second is the risk where what could go in favor of bears and what bulls should keep in mind while creating their positions. So let's start with the first chart over here. And if I just look at the Sensex by Dow Jones, now this is the ratio chart of Sensex, which is divided by the Dow Jones. So what does indicate that when the ratio goes higher, it means that Sensex is outperforming against the Dow Jones, and when the ratio goes down, it means that Dow Jones is outperforming over the Sensex. This helps us to identify the outperformance and underperformance of Indian markets over the US markets. Now, if I just look at this chart right from 2020 bottom, Sensex was outperforming till the first quarter, I would say, or probably the last quarter of 2022. And then we saw a decoupling effect. So basically, decoupling is that the one index outperforming or the Indian markets outperforming against the US, they are not in sync with each other. So whenever it is a set that when the US market fall, or it put up pressure on the other global markets as well. Well, that was not the case till 2022 end for the Indian markets. US markets were struggling in 2022 with the negative returns. At the same time, we saw Indian markets giving a positive return. Now, if we look at the whole structure right from there, we retested the red line. If you look at right from the highs, the only positive over here, if I just look at the current point in time, we saw since high of, I guess, November 2022 or December 2022, we saw a high being going down with the lower high, lower low structure. Now, the lower high, lower low structure, as per the Dow theory, is the bearish structure. For the first time now, the last week close, we have seen this ratio closing above the previous highs, which means that it is ending the lower high, lower low structure, and it is a sign of bullish reversal over here. Now, the impact which we saw in the first quarter, where Dow Jones was recovering at a faster pace and Sensex was going on a negative zone, which means that the Dow Jones has outperformed in the first quarter of 2023 against the Sensex. The tide is turning now in favor of Indian markets. Now, if you look at the Dow has been consolidating for a quite some time between 32,000, 34,000 range. At the same time, we saw Sensex coming back very, very strongly from the lower levels in April and May. That's the reason it is a sign of bullish reversal and marking an end to the bearish momentum of lower high lower low structure onto the weekly chart of Sensex by Dow Jones. It means that there is a resumption of outperformance of Sensex over the Dow Jones. Well, this is very, very positive sign as of now. And if these continue, Indian markets may continue to head higher and we may see a new high coming soon. So Sensex high probably 60,500 can be taken out sooner. If I look at the second chart over here, this is a Nifty daily chart. We have seen lower high low structure on Nifty as well. If you look at this black dotted line, which ended in the April, and we saw the bullish May as well. Even if you look at the momentum over there, we are witnessing a bullish head and shoulder pattern over here. Now, bullish head and shoulder pattern is basically the basing structure pattern formed right at the bottoms, and the bottoming structure over here indicates that there is a bullish momentum, and we saw follow-up momentum as well, where the bullish trend with the range breakout at around 18,000 level, 17,900, and we are continuing with the bullish trend over here, and we have hit around 18,400 levels now. So the momentum, yes, is very, very bullish on charts as well onto the daily chart. If I look at the next chart, which is the point and figure, the Nifty point and figure daily 0.25% by 3. So 0.25%, which means that every X and O you see on your chart, it represents a 0.25%, which is a quarter percent, 1/4%, and into 3, which means that every reversal box will be 0.75%. So if market fall by it is trending bullish and it falls by 0.75% on a daily close, it will change to the bearish column. Now, if you look at the historical move over here, we saw a series of a double top buy, which means that the previous high been taken out, there is a rally, consolidation, and there is a rally. So if you look at the previous 1 and 2 has been marked onto the starting from the left of your chart. 1 and 2 were marked where index rallied from 15,000 16,000 levels back towards 17,000 plus levels, 17,800, 18,000 levels, probably like and second leg, if you look at where we saw markets rallying from 16,200 breakout, then it follow up with the 16,800 breakout, and we saw the rally towards 18,114. Now this is the third time the history is repeating. We saw the first breakout coming at around 17,800 levels. The follow-up breakout is coming at 18,300 levels now, and I think, yes, if the history repeats, we may see the high being taken out 18,800 levels. And if you look at the momentum, yes, the market is supporting the bullish momentum as well into the current structure. The next chart, and if I just look at with the Sensex indicating an outperformance, with the bar chart indicating a bullish head and shoulder, with the pointed figure chart indicating the series of 1-2 breakout has been happening. So this is the third column which we are into the bullish structure. And if I just look at the fear and greed indicator, and if you remember, I've done a video right around 15,200 indicating that markets were extreme fear, and we had a huge run over there. Now, if you look at the fear and greed indicator over here, it has just moved into the greed zone from the fear zone. And yes, once it moves from the fear to greed mode on a weekly scale, the momentum continued to trend bullish over here when the markets are very, very bullish. So yes, I believe still there is a greed into the markets, and extreme greed level is yet to come, which will be a sign of a bearish structure. So yes, I believe this is just a start of the greed. We haven't reached the extreme greed level as of now. So yes, the trend seems very, very bullish onto the charts over here, and I think if the bullish momentum continues in Indian markets, Sensex will continue to outperform the Dow Jones as well. Now, as I said, we are dividing this video into two parts. So we discussed what is the bullish setup and where there is a risk now. So yes, the second part of the risk is very, very important to keep in mind. If things go wrong, what should you do? Well, it is a when you are trading, there should be a trading plan with you if things go wrong. Now, if I just look at this weekly scale chart, 1% by 3, which is generally the long term chart, uh, it is trading at the resistance zone and a major resistance zone. We saw 18,600 levels, we saw 18,887 levels, and then there was a failure. So yes, these two zone of 18,600, 18,900 will play a key resistance zone onto the charts. That has to be taken out for the bullish momentum to continue further. If in case if this resistance zone holds onto the weekly scale over here, this is could be the bigger risk onto the markets, and there could be a possibly a trap. What we saw when we hit 18,887, surpassing the previous highs, and then we saw a downside over there, and most of the investor, most of the trader were in a fear of investing again at the bottom levels because there was a trap onto the charts. If in case this trap happens again, so there could be, you should be ready with your game plan. What will you do and where should you exit? Now, the as I said at the start of the video, advanced decline ratio is indicating a sign of caution. So now if you look at your screen, this is the AD or the advanced decline ratio over here of Nifty 50 on a weekly scale. I'm not looking at the daily scale as of now. This is a weekly scale, and if you look at every time it goes above a 90 percentile, it is a sign of bullish, a sign of cautious to the bulls. We saw 18,600, then we dipped. 18,114, we dipped. 17,600, markets have taken a dip of around 600, 700 points. 18,887, we got down. Now back at 18,200, the ratio has hit around 89%, which is again a sign of cautious for me. If in case, so basically it means that when the Nifty is outperforming or the Nifty is trending bullish, and most of the stocks are into I would say euphoria mode, where every Tom, Dick, and Harry into the Nifty has been rising, giving a markets with a boost. At certain point in time, it goes into the overbought zone, and that's what the overbought zone is indicating on the AD ratio charts over here, or advanced decline ratio chart over here. So for me, I would slightly wait for a dip to accumulate once the AD settle down. Though we have seen AD been declining at current point in time. After 18,200, we are at 18,400, and the advanced decline ratio has been slightly declining over here, indicating that some of the stocks may or are witnessing some profit bookings onto the charts or onto the price action. And Nifty maybe probably at the floating at the higher level with a few stocks with being trending bullish. So keep a watch on this. This is very, very important. And yes, if in case there could be a time correction happening and the advanced decline ratio can see slightly onto the downside, and we may resume the bullish momentum. But at current point in time, it is suggesting a slight cautious sign for Nifty. And again, a weekly chart indicating 18,600, 18,900 being a crucial resistance zone onto the chart. So if in case we break above that, close above that, sustain above that, the resumption or towards 20,000 can be on cards. But yes, as an investor, as a trader, you should keep a trading plan where what things could go wrong. Even you have planned the bullish trade over here. So keep these things in mind, the risk over here. So just to sum up, Sensex to Dow Jones indicating that Sensex outperformance is just a beginning or resuming its journey. Bar chart and point and figure chart both are indicating on the Nifty a bullish scenario over here. And the onto the risk part, weekly chart is trending at the resistance zone, while advanced decline ratio is indicating a cautious sign onto the chart. So keep a watch on this. And in case you are looking for a bullish trade, keep a tighter stop losses, which could, in case market reverse, markets may see the stock wise a bearish momentum can be on cards. So keep a watch on this. Signing off, Brijesh Bhatia.